if you just want to buy Bitcoin, let's say you want to buy Bitcoin with a stablecoin or trade spot BTC USD, it's really a question of fees. Coinbase will scalp you 70 bips for a trade. Whatever value you're trying to trade, you're getting scalped. Trading on Binance, a little bit better. Kraken, kind of the same. Like these exchanges don't have any pushback because there is no optionality, right? Like it's not like Bitcoiners can just pack up and be like, all right, okay, I'm going to go somewhere else. There is nowhere else. So I think for them, it's a question of fees, right? If you lower the barrier to entry and any market can define its own fees, then it's a question of where liquidity is parked. Then I can go on chain and buy Bitcoin for 20, 30 bips. It depends on what market you're trading on, right? The second is, these Bitcoin native assets. So I'm not in the coin world. I'm starting to be. The DeFi opportunity for Bitcoin is huge, right? There's this latent value that's waiting to do more and kind of deploy. We've seen it with ordinals and BRC20s and runes. There's clearly a lot of excitement. I mean, we've even seen it with Odin Fund doing, however many $1 million of volume and since relaunch after getting hacked. It's insane. Like people have an appetite for this. And we're enabling exactly that at, a lower trust vector. So it's about really lowering the floodgates and enabling Bitcoin to trade.
Welcome back to Bitcoin Season 2. I have CEO of Flashnet, Ethan Marcus, with me on the show. Welcome to Bitcoin Season 2, Ethan.
I appreciate it. Thanks for having me.
So you guys raised, if I'm looking at this correctly, at the beginning of this year, 25, announced a year, raise led by like a who's who of like fintech and capital markets, including Blockspace's own Gwart. I guess my first question is, there's a modern era of Bitcoin. Do you think of Flashnet, your company, as being a like Bitcoin or crypto company or more like a fintech company?
I see us as a Bitcoin company. I think that there's a fine line between, what is Bitcoin and what is the rest of crypto. I'd like us to be just an infra play. I don't want to build consumer-facing products. I'm very happy sitting in the background building cool tech that, front ends and products can use.
Let's get into what the heck is Spark?
Yeah. So Spark is a new way to think about Bitcoin scaling. So it's not very new, actually. There's this concept of state chains that have been around for years now. And Spark is an iteration on top of state chains. So I think the Bitcoin layers guys do a great job of kind of categorizing the scaling groups. And Spark falls under this scaling group of native scaling. So there's Lightning, there's Arc, and then there's Spark, Arc and Spark. So Spark is basically just a way to delegate ownership of on-chain funds. So it doesn't require a new consensus, doesn't require new opcodes, doesn't require covenants and all these things that we're going to have to end up waiting for. It's purely delegation of on-chain funds with really great trust characteristics. So it enables you to transfer sats and then tokens, meta protocols on top of Bitcoin, very fast and very cheap. It's just a signing protocol.
Yeah, it's just a signing protocol, but it requires kind of an operator on the back end. And talk to me more about like the role of like what the operator actually does when a user is using Spark.
So we can get down and dirty technical, or I can stay higher level.
Let's go medium level.
Okay. So the operator's job is to help coordinate the transfer between one user to the next. To make it simple, we'll call private keys whole numbers. So let's say I have a private key that's equal to 5, and then these two operators both have private keys of 10 and 5 as well. If I wanted to deposit into Spark, me and the operators work together to create a key which is some value of 20. So now I'm depositing money into this key of 20. When I want to transfer to you, for example, and you have a key of 10, the operators would do some fancy math for us to find the difference of our keys, which is just 5, since I'm 5, you're 10. And then they would tweak their key by 5. So their new key plus your key can go ahead and spend the UTXO in the address that we've originally deposited into. The role of the operator is literally just to provide this tweaking mechanism to give you delegated ownership of on-chain funds. Their role extends to deleting their last key so that I can never spend those funds again. Because the funds in this 20 address, I need the operators to spend, right? And the operators need me to spend. because they don't know what my actual private key for this number 5 is, right? I don't know if that was too technical or not.
No, I think that's pretty good because I remember like a month ago, maybe 2 months ago, there were some attempts to try to like talk about the trust assumptions of the Spark of just like the Spark signing protocol. And it got into like the concept of state chains. And I fired off kind of a really reductionist tweet, which was like made the analogy. I don't know if you remember. It was like, okay, you've got you and your ex like exchanged some private pictures, and you trust them to like delete those later, but you like can't know that they deleted those. And that would be kind of like analogy for a state chain. Now, Spark is kind of a state chain, but I think you actually had an interesting clarification on like why Spark is maybe a little different than just that example.
Yeah. So a vanilla state chain is only one operator. So you're fully trusting this one operator to forget its key and continue, doing business as usual. Spark is different as a, either a threshold set or just a set of operators. We did a lot of work around Frost, which is the signing protocol used. And what we ended up having is this kind of nested Frost. So there's always one required participant, which is the user. So if you don't have the user signing, none of the operators can contaminate anything. They can't be malicious. The only malicious action that can happen in Spark is if someone sent you funds and then a majority of the operators are dishonest and they collude with the sender of the funds to double spend what they've sent you already. And there's a bunch of mitigations in place for this.
And I'm actually kind of curious, like where the idea of Spark came from, because I know a bit of the history of state chains, like the initial concept. I think it was like Rubin, Thompson, and then you had like this like I remember like Mercury layer, it's being worked on that. I mean, you guys may have actually hired, or maybe LightSpark hired one of the Mercury layer guys. Well, regardless, like I don't think we saw many state chains. I guess where did you guys develop this concept of this signing protocol internally? And I'm kind of curious, like how you decided to then build this and begin operation with LightSpark.
Yeah, I mean, full credit to Kevin Hurley, the CTO of LightSpark. He had, the GigaBrain idea for Spark. I think there's many reasons why vanilla state chains didn't take off. Mainly the UX sucked. It's like you couldn't split a UTXO. So if you deposit a UTXO into Spark or into a state chain, not Spark, you can only spend that exact UTXO. And then there's a limited set of time locks. So you have to exit the system within X days. And from a user point of view, they just don't care. Like they don't care what the trust assumptions are at the end of the day. They just want things fast and cheap. They want things to work. On the back end, there's so many, levers you can pull to make things more trust minimized. So on Spark, what we did is enabled way better UX. So you can now split UTXOs. You can now use tokens, and there's now relative time locks. So there's not a static time bomb where you have to exit the system in X amount of days. So all these things culminated into making a much better user experience. But yeah, Kevin Hurley is the creator, inventor of Spark. It's his brainchild. I can't speak to what his thought processes were, but basically the story goes that he had COVID and he was locked in a room for 2 weeks, and he decided, okay, wait, this might be something, and then hashed it out on paper.
And I remember him presenting it at our conference Op Next this past spring. And like, it's funny because I remember even like booking him as programming. I was like, I can barely kind of wrap my head around this. I need a little more time to marinate on this. Okay, so maybe we'll come back and riff on Spark a bit more, but I want to talk about like Flashnet.
Yes.
Because if you say you think of yourself as an infrastructure company, and one of those things may be acting as a Spark operator. If you can, what does an infrastructure company look like or do outside of operating Spark operator?
Just some background context. Flashnet is a markets company. I think this the biggest opportunity in crypto today is bringing Bitcoin trading on chain. So Bitcoin trading, Bitcoin markets do upwards of $20 to $30 trillion a year of notional volume. that trumps the rest of crypto. I mean, Bitcoin trades more at like any given point in time than the entirety of crypto combined. But it's the only asset that hasn't started trading on chain. So if you look at Solana and Ethereum, there's been a gradual rise of DEX volume compared to SEX volume. That just hasn't happened for Bitcoin. And what we've seen is this oligopoly kind of start standing up, right? So it's in the US, you can only trade on like Coinbase, Gemini, and Kraken. If you're in Asia, you probably trade on Binance. So there's only like a select few partners that get to actually operate and serve these markets. Whereas if you're serving an Ethereum market or a Solana market, just spin up like a UniV2 fork and you're there, right? So that's the end of the market that we're trying to fill. We think Bitcoin trading can be massively more efficient if it's done in a permissionless way. I think, lowering the floodgates for anyone to run and operate a Bitcoin market is a huge opportunity. So that's what Flashnet set out to do. We were originally building on Lightning, which was incredibly naive. And when Spark...
I want to double tap on that. Why did you not follow through with building on Lightning? You're not the only one that has
Lightning.
Yeah.
Listen, I think Lightning's great if done in a very, very specific way. Like if it's done, and also not just a specific way, but for a very specific customer. Markets need to be open to everyone, right? I can't expect Joe Schmo to want to trade and have to spin up a node, open channels, balance liquidity. It's not going to work. And I know this is like very pointed. I know that Lightning operation doesn't actually involve you opening channels anymore and you managing liquidity, but it's very much relevant when you're talking about, trading at high frequency and trading in high volume. These are problems that get super annoying to deal with. We tried building it for 6 months and decided, listen, there has to be a better way. And almost serendipitously, Kevin had the idea for Spark, and we were like, this is literally the solution we need. It's fast and cheap Bitcoin, fast and cheap tokens, and it doesn't sacrifice on the actual trust assumptions that we need.
This happens, you laying out this kind of at the same time that we see, I'm going to drop the name Hyperliquid on this podcast. Like we've seen, I'd say the on-chain trading world kind of decline relative to sexes for a while, but I'm not up to date on the exact numbers, but I think there has been kind of a trend of gaining ground. I would say the Hyperliquid story of generating a lot of revenue and fees of maybe we call, Hyperliquid a layer 2. I'm not sure you might call it a blockchain, but put that aside for now. That is comparatively on-chain trading, and that's generated incredible revenues. And I think it's sometimes am I correct that it surpassed Binance in volume on occasion? But either way, even if there is a lot of volume, do you look at that and do you see this validation that we may not just be losing ground to the centralized the sexes? What are your thoughts?
Yeah, listen, I think whatever you think about Hyperliquid and all the trust maxi people will say no, it's just a centralized exchange, this and this and that. They pulled off a masterclass. Kudos to them. In less than 2 to 3 years, they've spun up one of the largest exchanges in crypto. They've gained incredible mind share. And you talk to any one of their customers, and they are ride or die Hyperliquid, which I think is a testament to what an amazing product they've built. Whether it's fully trustless or not, I don't think it really matters. Look at how happy their customers are. They're clearly getting a product that they want. So no, that's absolutely validation. I think the one difference is I'm scared of perps. I'm scared of leverage. So we are not in the business of doing perps or leverage today. We're just doing spot and providing better markets for spot assets on Bitcoin. That doesn't mean that someone can't use our tech to build out perps. I just don't want to be the one doing it.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
So you mentioned like you originally were building on Lightning and it didn't work for this type of market you're trying to build. And I think a lot of people are realizing this, but where does Spark fit into, I guess we're going back to Spark. Where does Spark fit into like the overall Bitcoin scaling landscape? Like, do these things work together? Are we competing against other like types of protocols? I don't know. Where's your head on this?
Listen, I'm friends with all the guys building other Bitcoin L2s. I think they're incredible guys. I think the core distinction of Spark is the immense amount of focus we have and the uniqueness of it. So Spark is purely a settlement network. There is no smart contracts. There's no execution layer. It's atomic swaps, transfers. That's it. And that like unrelentless focus to make that perfect and to not compromise on trust is leading to something amazing. Whereas I think if you look at an EVM L2, what is the real value prop? To me, it's like if you want these EVM like smart contracts, then just wrap your Bitcoin and go to Base or Ethereum or Arbitrum. Like I don't see these bringing an immense amount of value. Whereas Spark being truly native, not needing a bridge, actually tapping into this native liquidity, I think is a huge boost.
Yeah, and you say that like Bitcoin, this massively traded asset, that number is only going to increase everywhere, both on chain and off chain. This could be a bit of like a rhetorical question, but like, what are the benefits to the user by trading Bitcoin on chain rather than through one of these, you say, oligopoly of centralized exchanges emerging in the US? Like, what are the benefits? And then both to the user and into the Bitcoin network.
Yeah. So I think it's couple-fold here. So it depends on who the customer is. If you just want to buy Bitcoin, let's say you want to buy Bitcoin with a stablecoin or trade spot BTC USD, it's really a question of fees. Coinbase will scalp you 70 bips for a trade. Whatever value you're trying to trade, you're getting scalped. If you're trading on Binance, a little bit better. Kraken, kind of the same. Like these exchanges don't have any pushback because there is no optionality, right? Like it's not like Bitcoiners can just pack up and be like, all right, I'm going to go somewhere else. There is nowhere else. So I think for them, it's a question of fees, right? If you lower the barrier to entry and any market can define its own fees, then it's a question of where liquidity is parked. And I can go on chain and buy Bitcoin for 20, 30 bips. It depends on what market you're trading on, right? The second is, these Bitcoin native assets. So I'm not in the coin world. I'm starting to be, but the DeFi opportunity for Bitcoin is huge, right? There's this latent value that's waiting to do more and kind of deploy. We've seen it with ordinals and BRC20s and runes. There's clearly a lot of excitement. I mean, we've even seen it with Odin Fund doing, however many $1 million of volume and since relaunch after getting hacked. It's insane. Like people have an appetite for this. And we're enabling exactly that at a lower trust vector. So it's about really lowering the floodgates and enabling Bitcoin to trade.
Maybe it's simple enough just to say you can imagine Bitcoin native trading on Bitcoin. But do you see like things beyond that? Like the coins are fun, the meme coins are fun. It's I'm unashamedly like having a blast in this world. But this is not a long term. Anybody who knows, like, it's not a long term sustainable thing. But then what's the alternative? Like, are we just going to be trading Bitcoin on chain forever, or does this evolve and mature into other things? I don't really know capital markets that well. I don't study these things as closely. Do you see like that business looking maybe different on when we do it on Bitcoin or on a comparatively decentralized platform? Like, yeah, where do you think this goes?
Yeah, I mean, I think it's a fair question. I think what we're building here is a primitive, right? Like, if you ask me, do I think like people are going to trade BTC USD spot and have a lot of fun? I think some people might, and I think there's huge arbitrage opportunities to doing it on chain and off chain. So I think there's definitely a market for that. But is that like a multi-billion-dollar a day market alone on chain? I don't know. Probably not. I think what we're building is a primitive to enable more financial infrastructure on Bitcoin. So for example, you bought your house with Lava, you get to bridge over to Solana to get stables. There's a world where those stables stay on Bitcoin, and then you can use that stable coin as collateral to buy something else on top of Bitcoin, where you never need to move out of this kind of Bitcoin ecosystem. So I think, again, it's about building the layers. So for us, the first layer is a market. You need to be able to swap in and out of any asset. And then, on top of that, then we can start talking about, okay, what does lending look like on Bitcoin? What are the pain points of going to other networks? What does, issuing debt look like? These are all things that are downstream.
Okay, interesting. You brought up stablecoins, so let's chat a little bit about stablecoins. You guys have your kind of inaugural, I think, stablecoin for Spark. I say you guys. Spark has the first stablecoin on it. Braille, if I'm correct.
So Braille is a stablecoin issuer. Spark does not have a stablecoin.
Yeah.
Yeah. I know the lines get blurry, but no. So Braille is honestly one of the best partners we have. They've done an amazing job spinning up a platform for businesses and individuals to create stablecoins and distribute them. So our stablecoin USDB, USD Bitcoin, is the first stablecoin on Spark. We'll use it to kind of wedge ourselves into liquidity. So BTC USDB pairs, USDB Bitcoin pairs, whatever you really want to trade. And the really cool thing about Braille is that they offer 0 BIP on and off ramp. So if you're an individual or a business or a market maker or an HFT, you can KYC with Braille on ramp via ACH or wire for 0 fees. Or the other cool thing is you can on ramp from Solana or Base, send in USDC and get USDB on the other side.
Yeah. So we see kind of a return to Bitcoin for stables, or at least Tether in particular is calling their shots, saying they're going to go to Taproot Assets, or they just did put out the RGB announcement. Neither of these have launched yet, as far as I'm aware. I will invite you to comment on this, because I have a hard time evaluating the technical feasibility of these, and are these just press releases? Are these in the works? I invite your personal opinions and maybe hot takes, or just room temperature takes on this idea.
I don't want to throw shade on anyone. I think, listen, a press release isn't real until it's real. And unfortunately, we haven't seen, anything come to fruition yet. I think there's a lot of people behind the scenes that are hard at work trying to make these press releases a reality. But I think the harsh truth is that I don't think stablecoins on Lightning would ever work. I think a multi-asset Lightning is a disaster waiting to happen. The Bitcoin graph just for payments with sats took years and years to seed to get to 95% payment efficiency on Lightning. How long is it going to take us to do the same thing with a stablecoin? We're going to have to convince these node operators to start opening stable channels. We're going to have to get these liquidity staples in place. And then at the beginning, it's just going to be super centralized, hub and spoke. I don't see the value in that today. The other issue is, and a lot of people are going to hate what I say, is privacy. A stablecoin by nature has to be regulated. It has to be compliant. And if you don't know what the fuck is going on with the stablecoin, you can't be compliant. If you can't freeze an asset after a terrorist holds it, you can't be compliant. And these are things that, Lightning cannot offer its users. So for that reason, I don't see Tether going to Lightning or RGB anytime soon.
So Spark launched,
yes,
I think a month ago, and it got flooded the first few days and stuttered a bit. This is great validation that the people, the Degens, they want to trade the tokens. This is great. But on the other hand, it was you guys had to hot fix a lot of stuff, it sounds like.
this is again on us and not on Sparks. This is Flashnet side. Yeah. Spark has been live for a bit now. They've been killing it. Things have been smooth.
I'm sorry. I keep like you saying the wrong words. You know what I mean? Yeah.
Yeah. No worries. No, listen. I think on one hand you're right. Huge validation. On the other hand, we miscalculated the appetite for this like crazy. I mean, we load tested for a couple hundred concurrent swaps because we stuck the beta flag everywhere, thinking people would just be nice. But no, we underestimated the Degens. We attempted to serve like thousands of concurrent swaps, and I think the figure was $300,000 in 9 minutes. That was trying to flow through the system, and then Flashnet decided, hey, this is a little too much for me, and started having some hiccups. So we shut it down. We decided to take a step back. We did 2 audits, mainly because Odin Fund got hacked around the same time. So we were like, might as well not have the same fate. And then started doing way more load testing. So our load testing philosophy before was very different than it is now. And now we are loading it until it breaks and then pushing it further every time. And I think that will yield much, much smoother results than last time.
I'm with you. I'm rooting for you. It's funny. I often pontificate on this idea that Degens are one of the more useful, like activatable communities and they're really underutilized because you can get really, really good real world stress testing of everything, and they'll just do it for you. Now you can't make it happen. You can lead the horse to water, and they can get really close. But what are your thoughts on this? Because if you are in the business of having a platform that lets people make tokens, or if you're in the business of providing token infrastructure, how do you navigate this really weird world we live in where you want to build for the serious capital markets, but your first users are absolute degenerates?
Yeah.
What are your thoughts here?
I think it's the same playbook that every other successful DEX has ran, right? All of the, and not only DEX, every other network has ran, right? Solana is now peaking in capital markets. I mean, it has probably some of the most sophisticated high frequency trading and MEV of any network, and in many cases, any capital market. And it all started out and is continuing to be powered by Degens. I mean, we see a lot of serious activity starting to happen, but the vast majority of activity is still Degen, right? So I think it's a question of how do you ignite the flame? And I'm happy to go out and talk to all these LPs and go to all these meetings with big market makers and start getting them to allocate liquidity, or we can just ship something that anyone can build on and let them run wild.
So you mentioned maybe wanted to riff on Bitcoin L2s a bit. You also mentioned shout out Bitcoin layers, in particular Giannis doing the Lord's work.
God's work.
The few intellectual, honest, uncompromising guys. Maybe a bit too uncompromising. But you threw out this concept, the corp chains. What is this concept? What do you think these are going to do to the overall topology and landscape of Bitcoin?
Yeah, I think we're speaking on the perfect day because just today, Stripe and Paradigm announced Tempo. That's their new, blockchain.
Yeah,
I think it's a mess. Listen, I think there seems to be a pattern with crypto where if you stay in crypto long enough, you end up just back in Bitcoin. Where you're an engineer, you're working on, Ethereum scaling. I'll see you in Bitcoin in 5 years. There is this return to the beginning. And I think it's just because there is this uncompromising level of rigor and standard that the Bitcoin core devs have that's enabled this, great thing that is Bitcoin. That is not the case on other networks, sadly. I think it's going to cause immense amounts of liquidity fragmentation. I think it compromises the entire reason that we're in crypto in the first place. I think it's fully just regulatory arbitrage. People are seeing that, hey, I don't have to have licenses to do this anymore. If I just, run a sequencer and post this to base chain every 5 minutes or whatever it may be. I think that's going to end pretty quickly. I think quickly is actually a longer timeline than like a couple months. It'll probably be like 5 to 10 years, but I don't see a world where there is a million chains and we have to use layer 0 to go from this chain to that chain. I don't see that being a reality.
Yeah, because at what point does the regular arbitrage get arbed out and you just go back to, you don't even just call it a sequencer, you just call it a server.
Yeah. Do I want to, just talk to Stripe to make my payments? I'm already doing that. What's to have a blockchain?
So, one of my favorite topics for people who do know their way around a blockchain, particularly Bitcoin, is thoughts on soft fork proposals for Bitcoin. You do not have to answer this, but, like this, as I was looking through the Spark documentation, it looks like it kind of relies on a lot of pre-signed transactions. Something like that could be improved with like CTV. Do you have opinions on like any of this popular software proposals? What do you think about soft forks in general for Bitcoin?
My unpopular opinion is if it ain't broke, don't fix it. And I think Spark is a perfect example of that, where we've been able to use the base layer rules of Bitcoin to create something great. Does Spark get better with CTV or Opcat? 100%. Would that make our lives 100% easier? Yes. Is that something I'm going to hold my breath about? Probably not. Like, I think the Bitcoin community can sit around advocating for all these things, but at the end of the day, the horizon for these changes is years and years and years. Like, Bitcoin is a snail when it comes to adopting new changes, which is a feature and a bug. So listen, I'm all in favor of them. I wouldn't hold my breath on them is my statement.
I'm in media. I've got a poke on this all the time. So, I was looking, you guys, I don't know who's producing the conference, but there's a conference day 0 coming up, and when this goes out early next week, the conference will be a week or two away. This looked interesting to me. You kind of got, it looks like the extended universe of Spark and Light Spark. Folks, what's this conference? Who's talking? Are you going? And what? Yeah, tell me about this.
Yeah, so Braille is hosting this kind of virtual conference, so there's no need to, fly anywhere, be present in person, which is great. And I'll be demoing buying and selling stablecoins with Bitcoin on chain. So it'll be a live demo. You can come and watch it. Hopefully it works very, very well and everyone is amazed. It'll be fun.
I'll keep this conversation tight and wrap up, but I'm kind of curious, like, outside of the stuff that you are working on right now as it relates to Flashnet and capital markets, like what are some other interesting things that you see happening in or adjacent to Bitcoin that you think are intellectually interesting or exciting? Where's your head at on the other stuff happening in Bitcoin these days?
I'm honestly like so locked in that I don't see anything on my periphery. So I don't know if I'd have good takes here. I love what I do. I think, what we're building is probably some of the most fascinating, these are some of the most fascinating problems I've ever worked on. And they're probably some of the most fascinating problems to work on in Bitcoin in general. So I feel like my brain is too exhausted to look outwards for now.
You're too busy building and putting out fires and getting an actual thing to market to dwell on all of the different narratives happening in Bitcoin right now.
Not there yet.
Well, that's a good secret to stay sane in this crazy world. Ethan, thank you so much for coming on Bitcoin Season 2. I really appreciate this, and our paths will cross in person sometime. I'm sure of it. Thank you.
All right. Appreciate it. Thank you so much, man.